All right, good morning, guys. Once again, sure you're all okay and all ready for this new week. So, previous week we focused on Eurochief and GPP Chef. And if you look at these pairs, you will probably think that maybe they were not successful. But if you look at it in another way, you will realize that yes, they were not successful, but not in a way some of you would have loved it to be, which is perfectly fine because targets are definitely different for each individual. So we'll go into these, look at what we could have done, and also um, what we shouldn't have done. So when we talk about targets, guys, we are referring to take profits and stop losses. All right. So we'll focus mainly on take profits, but we'll also do talk about stop loss as we go because it is fairly important. So what we mean is we've got a market that is going up. All right. So this market is going up, and then all of a sudden the market comes back into the key area or an area where you would expect to see the market react from and give you a setup. So when that happens, um, it's probably in this area right here. So you've done your analysis and you're very sure that from here on, the market is supposed to buy, and you probably want to see the market give you um, a third level, right? This is what you're expecting as a person. You want to see the market give you a third level, simple because the market has reversed this level. That's what you expect, right? But then you need to bear in mind that if you look at it, probably in this case, the market has already pushed three levels. Or maybe let's just say the market still hasn't pushed three levels. Because obviously, if I put it this way, people will be expecting a reversal. So let's just say we're here. All right. Let's just say we're here. And all we can think of at this point is the market doing, yeah. Now we've got level one, we've got level two, and all we are thinking about is the market pushing up. All right. All right. So we're here, and all you can see at this point is that the market has done level one push and level two push, right? Let me be clear about this. Right. When we say levels, okay, so this is level three, okay? ADR move one into level one, ADR move two into level two, and then ADR move three into level three, okay? So your levels are these ones right here, okay? And what's in between ADR moves, you can call them level one push, level two push, or level three push. I'm just saying this for the sake of those who always confuse it, but that's what I'm talking about. So if you look at this, this is the first push into level one, the second push into level two. All right. So then price after level two, it then sells and comes back down. Now, according to market structure, this is the 1 hour time frame. On the 15 minutes time frame, what you generally see is maybe three pushes, then back to a reset here, and then another three pushes, and then a peak formation and a reset, right? So that is what you will find. Sorry that it's not sitting here at the low like it is there, but I'm trying to show you that three pushes, and these three pushes, sometimes they are visible, sometimes they are not, but that is what you're looking at. And most probably your 200 EMA, maybe it's moving right there to show you that price is coming back to the 200 to form that kind of a setup. All right. Now, I've shown you this. So what we want to know is, where is my stop loss? Where is my take profit? So for instance, you want to find your stop loss area. If it's me trading this kind of a pair, right? I always say risk a percentage. What we mean is you've got $100 account, right? You've got $100 account. We're gonna do a bit of some maths here. So if we say we want to risk 3% of $100, how much is that? Who can tell me? How much is 3% of $100? People fear maths a lot. All right, $30, $3. Yes, $3. I saw that was a mistake. $3. Right. So if 3% is $3, right? What it means is, for every trade that you are going to take, you are willing to lose $3, right? So where your stop loss is gonna be, what I do is, if maybe let's say I have $100 account and I trade my account and my account is now sitting at 150, I still say 3% of 150. That is how I calculate. So all I want to find is, if I find 3% of 150, if it's $5, then I know my stop loss is gonna sit at $5. If 3% of $100 is $3, my $3 will sit, oh, sorry, my stop loss will sit at $3. So it depends with what my balance is. If my balance is $100, this is where my stop loss will be. If my balance is 150, this is where my stop loss will be. All right. So I use percentage. They are both 3%, but the difference is the balance. Now, the lot size that I am going to use at this point will also determine how far my 3% is going to be. For example, I have $100 account. So if I put 0.5 lot size, right? Obviously, 0.5 seems like a pretty big lot size on a $100 account. But let's just say my leverage does allow me to do something like that. So I enter with 0.5 on a buy, maybe right here. Okay? On a buy right here. So you'll find that my stop loss will probably be sitting right there. Why? Because 3% of $100 is $3. So if I drag my stop loss on my MT5, where it will tell me it's now $24, because when you drag it on your MT5, it should show or tell you that, yes, now it is $25. So, sorry, it is $3. So where it will going to say $3, that is where your stop loss is supposed to be, ideal, right? And I know for some of you, you want to make a killing and whatever, so it becomes hard to follow that principle. So what you do is you end up resorting into putting your stop loss maybe below structure or wherever, and you tend to lose more than what you would have wanted to gain, because the market decided to sell lower and your stop loss is sitting at $15 instead of $3. So what it means is that with your 0.5 lot size, you have now lost three opportunities of trading, because you have lost $15, so you have lost three opportunities. Instead of you trading 3 times and losing $3, sorry, 5 times and losing $3, you have now traded only once and lost $15. So 4 chances of you being able to trade again on a different pair, a different day, and so forth. So think of it that way, guys. That is how you have to um, put it into practice. If I'm gonna lose $3, so be it. Let it be $3. It can't be more than that. So that means this will then regulate what lot size you are going to play with. And the good thing about MT5 is that you can put a buy stop, sorry, a buy stop or a buy limit, right? You can put an order and still, for example, you can put an order and say, yep, this is a buy limit, right? You can put a buy limit and then put a stop loss anyway on the price. Put a stop loss there. And then you check and say, okay, this buy limit is 0.2 and I've dragged my stop loss. It says $3 at this point. If I delete it and put 0.1 instead, my stop loss will go somewhere here. All right. So that is how you can also gauge how much lot size you need. If you still see that your stop loss is closer to your position, then it means your lot size is bigger. Put another buy limit and maybe say 0.05. 0.05. Your stop loss will go lower. It is still 3%, but the only difference is your stop loss is moving positions. All right. So it is still 3%, but your stop loss is what? Is moving lower and lower. Okay. That is where the difference is. Now you're at 0.05 and you see, my stop loss now looks a bit better than what it was when it was sitting at 0.15. Because remember, sorry, at 0.2, remember, if you increase to 0.3, your stop loss will get closer. If you increase to 0.4, it will get closer. 0.5, it will get close until maybe you are at dollar lot size and your stop loss is sitting right there at the entry, because your lot size is bigger than your account. So that is what affects you in terms of where to put your stop loss. So you need to be careful. Know your account balance. If your account balance is $500, you need to calculate how much am I willing to use. If for me, I use a 4% rule. 4% is everything. That is why you'll be surprised to find that sometimes some of my lot sizes, they are 0.18, 0.17, 0.2, and all that. It's because they are calculated, and I know that if I am to enter here, this is how much I am willing to use. So my stop loss is gonna be at a certain point, but it still maintains my 4% risk. But then my target will be probably 4 or 5 times more than my stop loss, which is a good thing. That is where we are now going to. So we want to put our TP, right? I will address something after this, but for now, we want to put our TP. So this is where we take our entry from and put our maybe stop loss somewhere there, because that's our 4% risk. If you look at your target, right, the stop loss is obviously smaller than the target, and it's probably maybe 3 or 4 times. Let's see, what does it say here? It says 3.93. Yes, so it's almost 4, 3.93, the risk or reward ratio. So meaning for every dollar you lose, you're going to gain $4. That's what it simple means. Yeah, 3.394. So what you're going to have there. I know someone was asking about this tooling. It's just a tooling. It's just a tooling that will help you to know your risk, your TP and whatnot. But it's good to use your MT5 straight, pull those orders and check. Then if you're sure, you can then delete them and enter the rightful position that you want to take. But you can tell already that this is a good trade because how much you're risking is less than how much you're trying to target. And obviously, don't count the chickens before they hatch. All right. Don't count them before they hatch. Now, here you are, and this is what you're expecting. Right. Back to our stop loss. I know sometimes it's prudent to put your stop loss over there for whatever reason, right? It's prudent to put your stop loss over there. It's still okay. All it means is that if you put your stop loss, maybe let's say here, right? What it means is you are losing $1 to gain $1. That's all it means. So it means your ratio is 1:1. So you're trying to gain $1 and lose $1. If it's $10, then you lose $10. That's all that it means. All right. So it's fine if you want to do it that way. That's how your risk will be. Someone might prefer that I want it to be 1:2 instead. All right. And say, instead of using your 4% per trade, I want to do it this way. I want to, for every trade that I take, I want to lose half and gain double, right? What it means is I want to gain a $2 or lose $1. That's another approach that you can use. It will also tell you where your stop loss will be. This one is good in the sense that it puts your stop loss a little bit far away. It's not based on money. It's just based on position, your risk reward. So if you know that your TP is going to be 55 pips, then you want to lose a quarter of that, or you want to lose half of that, then you know your stop loss will be at 25 pips. That's all you need. Yeah. You know your stop loss will be sitting at 25 pips. They need to put your stop loss far. The only problem with it, it does not tell you exactly how much you are going to lose. So if the trade were to go down, then you get to find out that, yep, I have lost $25 to gain $50. So if your account is $100, it means you're now sitting at 75. Whereas for me, who is playing at 3% risk, it means I would have lost $3. Does that make sense? So my lot size is lower and I've lost $3. Problem with this one, if you put your lot size and be bigger, it means you end up losing more, all right? More of an calculated loss than how much you gain. Because if you increase your lot size, remember I said if you increase your lot size, it means your stop loss has to get closer. But in this one, unfortunately, increasing your stop loss does not, your lot size does not change your targets, because by putting 0.5 or 0.1 here, your target is still there, your stop loss still remains where it is, which is 1:2. So it means if you are going to lose with a 0.5 lot size, you will probably end up losing the entire account, $100 to gain $200, because that 1:2, 1:1, it doesn't change anything. Whereas me with a percentage, to say every trade I want to lose 3%, I get to get more chances of trading. Remember, the goal is to stay in the game a little bit longer, because you get more winning trades than you are going to get losing trades. So that's the whole idea. So think about it. Choose whatever you want to choose, whether you want to use simple risk reward ratio, which is 1:1, 1:2, 1:3, whatsoever, or you want to use a risk percentage, which is calculating your actual risk. That one will influence the lot size that you're going to deal with. So you'll find your lot size will be lower based on the risk you're willing to lose. Now, You can enter a trade and put your stop loss over there, no problem with that. And if price comes back a bit lower and then goes up, everything is okay. Some people depend on structures. They will say, I'm trading here on the low, right? And I also have got a neckline below that. So I will make sure my stop loss sits below these areas. Or maybe there is an order block somewhere here. So someone will say, I will make sure that my stop loss sits below these areas so that in any case, if price were to come down, I know that um, I am safe. That's another way, okay way, but problem is it's still the same as your risk reward ratio because you get to lose more because you're based on structure. Now, candles are different, the way they're built is different. So every pair is going to be different. And you'll find some of these necklines are very big and it will be hard for you to know where to put your stop loss. So this is why I'm encouraging you that know your risk percentage. That's the most efficient way. It will reduce your lot size and tell you exactly how much you're going to lose and where to put your stop loss and how much lot size you're supposed to work with. Now, target. You want to target this buy, right? So maybe let's say you put your stop loss at 3%, which is somewhere right there, for example. And then where is your target? I know we see two levels. I know that 100%, but that is where the problem is. So you want to see the market um, maybe come here and then form the third level, or you want to see it shoot straight up all the way up to the third level. This is where people always get caught up. And I always say, I remember I said this so many times during this week, even when we were trading Euro Chief and GBP Chief, our actual pairs. And I said, make sure that you target the highs. Make sure you target the highs. If you are going up, if you are going down, you target the lows. They will always take out those highs or those lows and then trade back into the range. So what they will do is they will take it out maybe with a week and then come back into the range and then probably focus for level 3. Or maybe come back and just sit there again for the second time. So what happens to you? You have entered, you have seen good profit, and then all of a sudden you are back into entry. If they didn't get to that high, fair enough. That's understandable. It means you come out with a break even or loss or whatever. But if they did, then it means that's where your exit is supposed to be. Now, I know some of you will be ambitious and say, I am targeting up to the third level. It's fine. But I will advise you, you've got a lot size 0.1. You're already sitting at $200. How about you close 150 of that profit here and then leave one position still running to see whether if you'll get there or it will come back down. And in that time, while that is happening, your stop loss is already a break even. When do you put your stop loss at break even? Look at your 15 minutes time frame. The moment your 15 minutes time frame starts to form higher highs like that, right? And I'm not saying wait until it has formed to 4 or 5 or whatever. The moment you see higher high, lower high, new higher high, then you know that, okay, they are not coming back to this lower low. So what do? Push my my stop loss to entry. Now, what does stop loss at entry do for your trade? Now, this is the trade that we're obviously looking into. And as it stands right now, your risk reward is 1:7. What it means is I'm losing $1 to gain $7, right? I'm losing $1 to gain $7. Now, because I am at break even, right? Because I am at break even, it means now I'm losing nothing to gain 1,490. You get the point? That's how easy it is. Your risk to reward ratio escalates very quickly because you are what? You have moved your stop loss to break even. So you're losing nothing, but you are gaining more. That's all that it means. The more closer you get it, the less you lose, the more you gain. That's all that it means, right? So that's when you are moving your stop loss, like for example, the pair is trading down against you, and you decide to move your stop loss even lower up to there. Because I know some of you, you move them. You might not tell me, but I know that happens. You move your stop loss lower there, but your entries over there. That means you get to lose a lot more than you were supposed to gain. It becomes even painful because your stop loss was sitting around this area right there, but now because you still think they might go up, you continue pushing your stop loss lower. And I know it's very painful to trade with stop loss sometimes because trades come, they go your direction, but you are out, which is why I'm saying control your lot size. It will put your stop loss far away. And by so doing, it will help you to enjoy whatever um target you are targeting because you've got a reasonable stop loss. So don't target that high because we do not know whether we'll get there yet. Your first target is this high, right? That's where you're going to get out with your trade. Now, if you look at Euro Chief, okay, so this is Friday, Thursday, Wednesday, Tuesday, Monday. So if you look at Euro Chief, so this is what happened to Euro Chief. This was a Good Friday, right? And we can see how we do have the market printing proper highs and lows over there. Okay. And until this time, they haven't broken, sorry, they had not broken that low. So we wanted to see them break that low, right? So we wanted to see them break this low, okay, right here. So we said we're gonna enter this pair. Where are we going to enter? The likely entry area we are looking at here is most probably somewhere there. This is where we saw price react to the last time, and that's where we would want to see price go into back and give us an entry. And this is exactly what happened. What just happened here? All right. Sorry. This is exactly what just happened. You can see already how it's looking. So this was your last day. So that's the beginning of the candle open. As you can see, price went down and then price started to trade right back. That was on a Monday, and boom, it got into your entry area where you would want to see a sell. And I did say that, yes, you can sell aggressively there, or alternatively, you can wait for the 15 minutes to print an M formation, right? And someone did send a very good diagram where he was showing what he was expecting, right? So you don't have an M formation at the moment, and you can see price looks like it's leaving you, which is fine. But we would love to see them come back close to the 200 EMA there to give us more of what looks like an information. Now, that looks better for me to take, right? Or if you want, you can wait. It's up to you, right? Already you can see they're gone. Now, if I had taken it aggressively, remember what I said our previous lesson? I said if you had taken it aggressively, you're going to have a better entry and a better stop loss area and higher target. But because you entered it in a confirmation area, you're going to get a bigger lot size and you're going to get a smaller target. That's all that it means. So most probably, you would want to put your lot size closer to the structure, but maybe just above if you are using structures and all that. But if you're using percentage, I'm sorry, you have to put it where your percentage says it's supposed to be. If they hit it, that's it, right? Now, this being your low, you're already in profit, and that is exactly what happened. And price did move down the way we expected it to be, until when we got to these areas. That's when I said, make sure you only target the low. Don't target anything lower than that. And what happened was we did get a hit on our take profit, as you can see. Going back to H1, this is how it looks like. And I know when red candles are like this, people will be so excited and they'll think, oh, I think this is happening, man. We're going to make a killing here, right? Every time when price gets to a low, they will react and start going back. It's something that will always happen, whether you like it or not, right? So according to your trade, you are out. You are done with the trade, right? Or you left a runner, that's a different story, but you know that you are out. Now, whatever is happening now is no longer part of your trade plan because you know, okay, for me, for this week, I am all done. Okay. If you still want to continue trading, maybe you might consider reanalyzing to make sure that it does align with what you want to do. But you can tell whatever is happening now is no longer part of the trade idea that you had. But your trade idea did come to success. Same applies with GBP CHF as well. If you look at GBP CHF, it did hit the target too. It did hit the target, but not what we would have expected. What day was it? No, unfortunately, GBP Chef did not hit the target. I remember because for some brokers it did, but for some it didn't. And that was during the spread time because you can see even on this one, it did not. It got very close. Maybe you would have got out with just a touch, or for some you wouldn't have gone out. But same thing applies. I did say we can go out, target the low, right? So if you had gone in through confirmation, obviously your entry was going to be here. If you had gone in aggressively, your entry was going to be somewhere here, right? It was going to be somewhere there. So that's how you are targeting the low and not any targets that are a bit lower than that. I will show you Euro odd, our Euro odd. Remember, we traded this Euro odd, very nice trade, and the analysis was good. What day was it? Yes, it was here. So we traded this part of Euro odd and made a good killing. It was there. And I did say our take profit was on the low, but not the actual low, a little bit above. So I'll have to put my targets not on the end of the week, but somewhere a little above so that whatever happens, they don't miss my target. So we traded this a few weeks ago. I think it was 3 weeks ago. And that was a very good trade. And I even said your target probably is somewhere there, right? Which is very fine. But for me, I would rather look for an entry. Yeah, that was where our target was supposed to be initially when I discussed it. In fact, it was lower right here where there are these red candles, right? So you can see that if we had held this pair, we were eventually going to go all the way down to our take profit. Now that looks very excellent, right? But remember, we entered here, somewhere there. That is where we entered. So come to think of it, you were going to go into profit, price will come back into your entry. Maybe probably by then your stop loss is at break even, take you out, and then it goes away without you. So what's the best way to attack these such kind of things? Take your profit at that low, whether it's all of it or 75%. I would advise 75%. If you leave one running position, that's fine. If you don't, start reanalyzing and looking into selling a bit more. I remember someone asked me about this, and I did tell him that, yeah, Euro odd has now begun to sell, but this wasn't in the group. One of the students had asked me, and I said, yeah, it has begun to sell, but that was somewhere here. Anyways, it was somewhere there on a new week. Uh, they started the new week going up. They created the high of the week, and then they started selling. So these are the things you are looking for, and you are saying, I'm going to start looking for new opportunities around that area. And again, if you maybe decide for yourself that you're going to trade right there, still target the lows. Still target the lows. That's why you are supposed to target. The low remains your target. All right? The low remains your target. It doesn't change anything. Low remains your target, and then you evaluate and trade again if it means B. That's how you go with it, guys. Don't just jump in and out and you are not sure what you're supposed to do, and all that. And it kind of defeats the entire purpose, because the market will do whatever the market wants to do. That's one thing that should know. As much as you now know the knowledge and all that, the market will always do what the market will always do, and that will not change anything. I saw this opportunity on NZD but I didn't trade it, and this was a very nice sell, a very, very nice sell. If you wanted to target the low, this is where you're going to be. And then boom, you get on your target. Like I said, I don't put them right dead on the low. I put them a little bit above. Maybe mine was going to be where the bought candles end. That's where my target was going to be, most probably. Right? But this is how you just get it nice. Because remember, you haven't seen this. This is in the future, right? All you can see at this point is just your trade, and your trade is going the way it should, and boom, you're out. Now, whether you want this trade to go even further lower than that, that's a different business for another day, or you want to swing or whatsoever. But be very careful, because swinging wants very small sizes, because it will go for a long time. So if you are one person who wants to get money quicker, then lows and highs become your target. So in this case, your low was going to be the target. Just target those. Look at USD USD I remember saying to you that I then looked at another opportunity, and I found it on USD. Now it was this day right here. All right. It was this day. Where is my, yeah. So this is all I wanted, right? I saw this nice sell right here. I saw this nice sell, and that was a very good sell. And where was my target? Right on the low. In fact, I think I targeted that low on the left-hand side, but nonetheless, my target got hit. So this is where I was looking at, somewhere around there. That's where I was looking at, and that is where all the body of the candles closed. So it went down and got my target right there. It wasn't a big sell, just a very small sell and proper lot size, hit my profit, and then it started reversing. Now, I do not have any power to control the market if it starts doing what the market wants to do. That's no longer my problem because I've done my part and I've gone out. So what happens with the market next is no longer my problem. That is one thing that you need to know. Whether I wanted to sell a bit more or whatsoever, the market will do what the market wants to do. And it will move the direction the market wants to move. And I tend to zoom some of these things and just look at them and say, okay, what really happened this week? Because I love to get that kind of information, to say, okay, what really happened this week? If you check, that's your Monday right here. So if you check the price action from Monday, all you have been doing is consolidation. That's what you have been doing. Consolidation right from Monday, even Wednesday is consolidation. The only difference about Wednesday is that they went a little bit lower. So what were they doing? Accumulation, which is consolidation initial week, go down, mark the low of the week, and then start to reverse midweek. That is what we call by midweek reversal and all that. If you have had that term, but you can tell Monday, Tuesday, nothing happening. Wednesday, consolidation again, but then we go down and form the low of the week. Then we continue to buy for the rest of the week. So if you look at it from the 4-hour time frame, that is how it actually looks. You can see how Monday, Tuesday is compressed, and then Wednesday breaks out of that consolidation, forms the low, and then takes away. It's even cleaner on USD card. If you look at USD card, this is what happened. Monday, basically Monday, Tuesday was consolidation. Tuesday, they did more like a false breakout, went down, created a low, and then went up. Let me show you on the 1-hour time frame. So you can see on the 1-hour time frame how it's looking. So Monday, consolidation. Tuesday, false breakout, go down, create the first leg. Wednesday, second leg, and then midweek reversal, which is a buy for the entire week. You look at other pairs, the likes of USD ZAR. So what is USD ZAR doing? Man, this is so simple. You can tell USD ZAR is what? Consolidating. Nothing is happening. The only thing that happened was Monday it sold, Tuesday it went into that consolidation phase, marked the high, marked the low, and then what did it do next? It stayed within that area. It never moved. So that is how difficult. So if you look at it, like I look at these things when I'm trading a pair, and I will say, okay, on Monday, this is what you did. On Tuesday, this is what you did. Now we're in the third day. If something doesn't happen, then I will let go of that pair because to me, you're just consolidating in one area. So it's clear that if you couldn't do it during the start of the week, you can't do it now, you know? So that is what I look at. But if you look at the likes of USD JPY, you can tell when they are moving how they move all the way down, form a low, and then move all the way up. So these are the kind of pairs or trades that we would want to take. The ones that we know that they clearly move. Or we're not expecting them to move entirely both ends, but at least we want them to move at least one side of the week, whether it's a reversal or it's the start of the week. All right. So now, after having said that, one last thing I wanted to mention because someone asked this question and I said we'll talk about it. So I'll talk of this in passing and then we'll look at the focus pair that the pair that I want us to focus on. Questions first, and then I'll go to the pair that we want to focus on. I'm sure we'll catch up on time. So someone was asking about cross pairs, right? So these pairs, you've got US, for example, let's say Shift JPY, right? We traded Shift JPY, okay? So you wanna maybe buy Shift JPY. So how do you know that Shift JPY will move? So what happens is Shift JPY is a combination of USD and USD JPY, right? So it's a combination of UF and UJ. So whatever happens to these two guys will influence what will happen to this guy. Right. Now, because this is in real time, you need to be very clear and careful about it. So the market works in momentum, right? If it moves USD JPY more and USD CHF a little bit, it will influence how much CHF is going to move. Now, I will show you this on the chart so we don't waste time, because we've spoken about this before. But for the purposes of those that want to see what happens, right? So here is a move of USD, of Chef JPY, right? So you can tell how much Chef JPY moved all through up to there. This is on a Wednesday, right? So Chef JPY moved all through like that. If we go to USD JPY on a Wednesday, this is how much USD JPY moved on a Wednesday. If we go to USD CHF on a Wednesday, let me delete everything, remove one drawing. If we look at USD CHF, it was doing the opposite, right? So it simply means that the reason why Shift JPY moved further, it's because USD JPY was pushing up, and the way it was pushing up, it's in such a way that when it prints a green candle, you will find most probably that time USD CHF prints a red candle. So what happens is whatever they are doing, it will come out double on Shift JPY. That is how they generally move. It will come out double on Shift JPY, because Shift JPY will depend on what they're doing. You look at it here, USD JPY moved further up, like very much, a lot on the following day. You look at USD CHF, did the same thing, a lot on the same day. Now, because they both moved a lot, then you know if you're on Shift JPY that you won't have as much move as you would have expected, because USD CHF and Shift JPY, they are pushing very hard. So you'll find this pair will move a little bit. All right. So that is what you are actually looking at. If you look at the if you look at the Friday, you can tell how USD JPY has got more bearish candles than it has bullish ones, right? More bearish candles. Now go to Shift JPY. You can tell how Shift JPY also has a bigger movement. It's not too big, but it's a more relatively bigger movement than what you see on USD CHF. So USD CHF was printing green candles in between, especially this candle right here. It did influence the move a lot. The fact that it went opposite, right? The fact that it went opposite, whilst maybe USD JPY pushing down, that influenced how much Shift JPY was going to move. So that's how you kind of look at it. But because it's real time, so what you have to do is you will have to analyze USD CHF and make sure that if you want to buy this pair, right? For example, um, let's say this is our peak formation and we want to buy. I hope it's our peak formation. And you've already seen the move up, you've already seen the second move, but then prices come down right here, and we expect price to buy next week. Yeah, that is actually a very good trade, I think. Yeah, it is a good trade. So we expect price to continue buying up. So that means we want to see price go up. Your target is right here. Okay. So because that is what you are targeting, you just want to go as far as that. So if this is a buy, right, you then need to confirm with Chief JP. You don't want to uh analyze too much because you are not concerned about these two pairs. All you want to say is, where is this pair going, right? What's the likelihood? Problem is, because it's Chief JPY, is this USD Chef, you might have to look at maybe DXY as well to see how is DXY going to react. But you can tell that it is also a buy. So that means when you now trade it, you will look at the momentum. That's all you're concerned about. If you see that USD CHF is buying heavy and sorry, USD CHF is buying heavy and USD JPY is kind of lazy, then you will know that, okay, for today, I might not hit my target because USD CHF is just running away. But if you see JPY buying heavy and USD CHF a bit laid back, then you know guaranteed Chief JPY will hit your target. Something like that. All right, that's how you kind of look at it. So all these pairs, CAD Chief, CAD JPY, Euro, CAD, Euro Odd, all those pairs, GBP JPY, GBP Chief, and so forth, they will all be dependent on those particular pairs. So you just want to cross-reference and make sure that whatever you're trading, if you see that it's not moving or let's say USD Chief is actually moving in a direction that you were not expecting, maybe it's time to reconsider your analysis and just be sure that you are pointing in the right direction, rather than having a stop loss hit, something like that. All right. Now, I don't know, according to the profits and targets, is there anything that anyone wants to ask before we look at the pair that I'm focusing on this coming week? Anything anyone wants to ask in terms of those profits and targets? Or we are all good? If we're all good, just say, I'm good, I'm good, I'm good. Someone is asking, don't we have a third level on all pairs? What do you mean all pairs? Which pairs? Sorry.
Hello, coach.
Hello, what's up?
Uh, I'm just a bit confused here. If you look at Chief JPY, isn't it?
Mm-hmm.
Um, we supposed to have a third level there. And then
Mm-hmm.
if you notice on H4, we have can you push to H4? What I was expecting is three levels on H4. So far what I'm seeing, we are in the second level.
Mm-hmm.
But then that's why I'm asking now, aren't we supposed to have a third level on H4 in order to complete the D1 movement
Yeah.
also.
Yes, you are right. We're supposed to have a third level. That is why I said um I'm expecting it to buy. Reason being, remember, this is what we traded last week when we bought. This is the buy that we took last week. And then after taking this buy, prices come back close to the low right there, and it's now giving us proper levels. So that's where we start counting from, right from here. So we want to see the third level for H1, and at the same time, yes, we would want to see the third level for H4 as well. But like I was saying, if you are to take this trade, right, think about it. Where do you want your target to be? Are you gonna wait for the 4 hour to print three levels? We don't know when that's gonna be. Or something like this will happen again. This entire pushback to the downside might happen again. What do I mean? I mean, we go back to the third level, maybe here, and then we push back again all the way up to there and start forming again three more levels, right? And your entry, where is it? Your entry is probably right there. So what happens? You are out because you've been taken out. So that's what I'm saying, that my target is definitely that high, okay? If price gives me another opportunity to take another three pushes going up, I will see that peak formation or reset, whatever it will be when it comes. But at this particular moment, I'm targeting that high and I'm out. That's all we're looking at. Remember, when we traded this one, all we wanted to see was, because that high was a bit far away, we knew that price would most definitely get there. So we were targeting that high. That's all we wanted. And everybody who got out from there, they made good profit. Everyone who got out from there, they made good profit. And our entry was actually right here, right? So everybody who got out, they made good profit. But if you had held on and hoping that maybe, just maybe, we will break even this high, then you would have lost it, because the price was going to come right back into your area, or your entry was somewhere here. Price was kind of come back to your entry, take you out, and then starts buying again, and you're already out. So that's what we're trying to avoid, because the market will go where it wants to go, guys. All right. So yes, we're expecting three levels, correct? But at the present moment, our setup is right where we want it to be. And remember, I said prices come back right here. Okay. And you can see where it is tapped in that area right there. And we're expecting to see price go up. So that's a good buy, maybe on a Monday or Tuesday. If you look at it from the 4 hour perspective, same thing is happening. Prices come back to that same area. So that same area, even on 4 hour, it's there. So prices come back to it. So what are we looking at? We're thinking of taking a high. Now you've got two options. Option number one, do you want to target this high, or do you want to target this high, right? So it's entirely up to you. It depends with what you want to do, right? Whether you want to target that high or you want to target that high. But rest assured, when price gets to any of those highs, it will definitely react. So this is H4. Price would probably come here, get back inside, and give you that. But maybe you won't see it on the 4 hour like this, because we'll see it on the 1 hour maybe, but 4 hour will be just pushing all the way through, So that is what we're looking at. But yes, most definitely price will get to that area right there and form a peak formation, because we want to see the third level. Then we can expect a reset, and then from there we can expect price to go up three more levels on H1 and so forth. All right. Now, price can also decide, I'm gonna stay in this range for a long time and don't do anything. There's nothing wrong with that because we've seen him do it before, right? We've seen him do it before. So the question is, what's stopping price to continue doing the same thing? Those are some of the things that you look at, right? But obviously, we don't trade expecting to see consolidations, but consolidations are there and we can't run away from them. That is one key thing that you have to know. Consolidations are there, you can't run away from them, even though we don't trade expecting them. But if we see them, we avoid them. All right. So the pair that I was looking at was Audi Chief. So I kind of want to sell Audi Chief this coming week for several reasons. I don't know if this trade will play out or not, but that is my expectation. You look at the monthly time frame, nothing to see here. Price is just um, pushing back after a long sell and after breaking um, a low right on the left-hand side, which is an all-time low. In fact, it broke two of them. Another one is this one right here. So price is just trading right back. We look at the weekly time frame. This is how we're sitting, right? So now, this being the way we are on the weekly time frame, I looked at this current price action. So I've got two opinions here, but I'm willing to take the risk. Number one, price might trade right back there and then sell at some point in future. All right. Price might get there, which is fairly good, but that's not the trade idea I would like to prefer at this particular moment. Now, if we zoom in here at this current price, right? I remember I said buy order chief. That was 2 weeks ago. And no, 3 weeks ago now, because we didn't have these three candles by then. We only had this one. And I said buy order chief and just hold. It will hit your target. And I said the target was 50% of this candle. All right. And guess what? We have come to that 50% and we have taken out that 50%. Everybody remembers this. It's there, right? So you could have taken this trade all the way up there and get your good buy from there, right? Nonetheless, we don't live in history, so let's look at what's happening now. So when I look at this price action, I can see how price started trading higher, and then it did something this particular week. It took out the high of these two equal candles, but then quickly closed below them. So that means it never went further. So what it means is I'll mark my high, I'll mark my low, and then I'll probably put 50% there. This is my low, this is my high, right? So that's my candle range, okay? So that's the range of my candle, and we've taken the high and we've closed above. So what does it mean? It means the next candle that's coming is gonna go down. Either it will go down to 50% and then go up, or it will go down to 50% and then continue going further down, which is targeting this low, right? So this is a trade idea, but all I know is at this point, I want to see my pair sell, right? That is what I'm looking forward to. I want to see my pair sell. Now, how then do I how do I know definitely is going to sell. So this is what I have in the higher time frame, which is the weekly time frame. And about your take profit and all that, again, we target highs and lows, right? I know if you look at this, I'm saying it's going to sell up to there and you're thinking, hey, I'm going to make a killing. That's not how it works. Target the low or high on the 1 hour time frame because that is where you are trading, right? So we'll get to that. Now, after having said this is the trade idea, we drop down to the D time frame. Let's see what's happening there. So we're in the D1 time frame, and you can see this is the range we're looking into. Number one, like I said, 50%. Number two, anything lower than the low. So if you look at this price action right here, you've got candles pushing up, 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 up until it gets to this point. Now, it gets to this point, marks highs on 2 days, the same high. Price then comes above those highs, that is taking out stop losses and so forth above those highs, right? Takes out above those highs. Now it's clearing out everything that's above, and then price it closes below this candle right here. All right. So it takes out the highs, anything that's above there, but then sells and closes below. So what am I expecting after that? I'm expecting, this is what we call an engulfing pattern, right? So I'm expecting to see price continue going down, okay? But then what happens the next 2 days? Price does not go down, price goes back up. So we want to know how far it will go. That's all I can see as far as the D1 is concerned. So now I want to see the 4-hour time frame. So if I go down to the 4-hour time frame, this is how we're looking. Look at the price action. Price moves up, and we can tell this is an uptrend because the market is printing higher highs and higher lows as it goes up until we get to this point, right? Until we get to this point where, number one, we print out a high right here, print out a low, come to print out a high. Why am I saying print out a high there? If you look at it right here, you can tell how we broke structure right there, right? Okay, I'm going to remove the pen now so you can focus on that candle. You can see the line where I drew the high of the weekly previous candle. You can see candles closed above there, right? So that signifies this is a new high. And now I am expecting a low, which came here, and then a high, which came out there. So all this is happening, and price has broken the last high. So which one is the last confirmed low? The last confirmed low is this one, right? That's our last confirmed low. Now, what happens next? Price rallies all the way down to there and takes out the last confirmed low. So what does that tell us? That tells us the market has shifted direction. Okay? The market is what? Is shifted direction. Now, let me take you a little bit back. Okay, so we have a low here, okay, where there's a dot. We have a high because this low is what broke this high right here, okay? And then they went up to form a new high. Why didn't I choose this as a low and that as a high? It's because this low did not take out anything. Okay, let's assume it's a low. It did not take out this low, all right? Neither did it do anything really. This high as well, it didn't do anything. What we mean is if, let me remove this a little bit. So what we mean is we took out this high, Sorry, I'm using a bigger pen so you can see where exactly I'm looking at. We took out this high, and then we have this low. So this pair is trading within this range. All right, it's trading within this range. So until these two get broken, we're in an uptrend. So what happens is we break the high instead. So whatever happens after that doesn't matter. All we want to see is the price trade back into the range and give us a low, but the low will be confirmed only if it takes out the high. So it means if it doesn't take out the high, then it doesn't matter. It's not a low because our low is this one at this point, and our high is maybe that one until we take out both. Until we take out either the high or the low. So this low gets confirmed if we take out the high. So that means this is nothing. This is nothing, but this is a correct low because it took out this high. All right. So I'm sure you get the sense of it. So that is what happened here, right? So we've taken out the low. So we've taken out the low after taking out the high. So I will remove the drawings. Okay. So our confirmed low is this one because it took out that high. All right. That is how it is. So where do we expect to sell from? Would want to see price trade back into the range if possible and give us a setup somewhere here. But now 4 hours not showing us the exact location. Remember, I said we will look at areas where maybe you've got a bullish candle among the bearish candles, price reacted there. So there's a likelihood it might react. Or maybe you can use the one on the opposite side and say, yeah, price did react when it got at this point. So I'm expecting it to react. But you'll find if we go to another time frame, maybe there is somewhere where we've got a proper place we can use as an area of interest, right? But we are seeing price form a price from a low, price from a high, price from a new low. So we are seeing price coming back into the range so we can form a new, so we can form something like that. So we are looking at that. We took out the high, came and took out the low, and now it's trading back into the range so we can form a new lower low. That is what I'm expecting from this trade. And the good thing about this trade is that it's already in the area where I wanted it to be. So I'm willing to take this sell straight away from Monday and see where it takes me if it does work out, right? But remember, I said on the higher time frames, we can still trade back all the way up there, but I don't know. So I'm willing to take the risk. All right. Now, this is what I'm looking at from the 4 hour. Going back to the 1 hour, this is how it looks like. So from the 1 hour, you can now clearly see what we were talking about. So from the 1 hour, we did break that low right there with this entire move. And then the candle I was talking about, you can see that green candle, right? So price is moving down and is forming bullish candles among bearish candles. Why is price doing that? It's reacting to those areas. So you can tell how price reacted to these highs. It did the same thing when it got to this point and it put in some green candles over there. Price went even bought here on this green candle, hit there, and then started selling. So that's what happens. Why did price start reacting here and go back up with this little buy? It is because of this area right here. All right, because there is a red candle among green candles. Same applies if you do it like this. Same area, but this here, it broke it. Same area here, it reacted. Same area there, it reacted. So price will always react when it gets to these areas. It's not a coincidence. Even on this low, you can tell how price reacted there with that small green candle right there on that low, right? That's what we're looking at. Um, Now, this then shows me that, okay, this is the candle where I would expect to see price come into, and that is exactly where we are in terms of price. So if I am to sell this, I'm targeting to put my stop loss maybe a little bit above those resistances right there and see what happens. But my target is the low. So maybe I'll put it somewhere here. Okay. So even if I put my stop loss above the highs, my target is still a bit more than that. But again, 4% rule. So it will go where 4% is supposed to be. But that's how I'm looking at it. I'm looking into profiting that part. Whatever is going to happen in the near future is a problem for another day. The current target that I have is just to close over there. All right. If this trade does hit my stop loss and continues going up, fair enough. It is what it is. But that is what I am expecting to see happen on this trade. That's what I want to see this trade print out. So you can then count levels if you want. And you will see that it will still take you to the same uh, area of 3 levels right there. You've got your head and shoulders right here. Of course, start at the second leg of your head and shoulder. If you count your levels, I did count them yesterday, and you can tell that we've got 3 pushes going up until we form a peak formation. Then we come back to a reset, and then we've got 3 more pushes going up, and we quickly go back down to the 200 EMA right there. So that is what I'm expecting, guys. If this turns out to be a reset and it gets confirmed by taking out the high, fair enough. It is what it is. But I'm expecting to see that trade idea turn out. And if it does sell, then I close at my profit. Then I'll start looking into selling it a bit more this week. I did look at other pairs, but this is the one that I said, okay, that's what I'll be looking at. So look at how we took it from the higher time frames going down, explaining the idea of what we're looking into. And that's how sorry about that. That's how we expect the pair to unfold. All right. So anyone has a question about this auto chief pair, or you've got a different idea altogether, please let me know. What do you think? Do you think it's right to sell? Do you think it's not a proper sell? What do you think? Please let me know, whether on the chats page or you want to speak up. If you've got a problem with it, just let me know and say, yep, I do see a problem. I don't think it's going to sell for reasons A, B, C, D. Like I said, I know on the weekly time frame, this is what we're looking at. Maybe price might want to close this entire clear price move there and go all the way up. But the fact that it has taken out the high of those candles there and then close below, I'm expecting price to sell first before it buys. Now, reason why I'm targeting 50% is simple, because all right, let me draw the 50% again so we can see where it is. All right, so we go back to 1 hour. So reason why I'm targeting 50%, um, it's simple because yes, I can see that it price might want to buy. So if it's going to come down, I would expect price to sell all the way up to there and then form a peak formation and go up. So it's simple coming back to that low right here, something like that. So that's the trade idea. If we are going to continue with the buy all the way up to the top, but if we are not going to continue with the buy, then I'll love to see it sell lower than that. But that's how I'm expecting it. I expect it to sell from the start of the week. So the silence tells me everybody agrees with me. You don't have any problem with that. So that means this is going to be our focus pair. And I'm not saying don't trade anything else other than this. You're allowed to trade any other pair as you wish, whether you want to share the analysis or not or whatsoever. But the majority of us are going to be looking into auto chief, hoping to make a profit out of it. If we make a loss, that's it, part of the week, and we move out. If we make profit, then that'll be very good. Someone is saying, can we check USD card? I think I saw someone saying, may you please assist with checking step and V75 last week, please. Kindly confirm, is there in particular something in particular that you saw about last week, or you just want us to check last week price? That's what I wanna confirm from you. Is there something in particular that you saw and said, yeah, last week this is what it did on what?
Yes, can you hear me?
Yes, 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 I can hear you.
Yeah, I have a friend of mine, so we were having a conversation about it. So we wanted to wait for this meeting so that we can confirm it. So we
Okay.
were basically disagreeing
All
with
right,
what we are saying.
interesting. Okay. Um, let's see if I can get. All right. It's only that this doesn't fast forward and it only shows from 24 hours. If it doesn't work to our favor, we'll look into maybe let's just go straight to the MT5, because if we don't have a weekly candle, it would be very difficult to check what we're looking for, right? Um, so step, I love this pair. V75. So what are you, or what were you looking for in terms of V75? Maybe give me an idea to say, this is what I was thinking and this is what they were thinking, because when was Monday? Did you say it
So
last week?
yeah, if we can maybe focus on from the current price
Mm-hmm.
going backwards. Yeah, I think I can explain from that way, especially from the step index. I think it's the step index that actually. Uh,
Okay. So, so it's step and V75, right?
so we had a break of structure according to me.
Mm-hmm.
We were having a on the step index going
All
to the
right.
upside because it was on the same day, or what was he saying? He said because the price closed on the inside the previous day's price, yeah, inside
Mm,
the range of the previous day. And then that was not regarded as a level. if you can go to step in H1, I think.
Step
Yes.
H1. So you mean starting from this low, right?
Yeah, from starting from that low. If you would count your levels from that low, how many levels would you see?
All right. So first of all, we've got this first push, right? Up to the high. And then we've got the second push all the way up to the high, right? But then as while we're expecting this to be our second push, price comes back and closes right there, right? So it simple means this entire thing is a consolidation. This one. So I am expecting that this day closes where it is going to close now. Then we can say level 2. Is that what your friend was saying?
That's basically why that.
Exactly. So that's how you would count it. Why am I saying that? If you count this as your second leg, right? Remember, you are not wrong because you are using higher highs. Okay? All you are focusing on is on higher highs, and you're saying, I'm expecting higher high number 3. Did you get the sense?
Yes.
You're expecting higher high number 3. But keep in mind that price was moving higher, and then all of a sudden price pushed backwards. So if only we had an ADR tool, you would realize that price is aiming to close there on the previous peak formation, okay? Which I can guarantee you, but don't believe me, I can guarantee you that price will make this its level 2. In fact, what it will do, it will create what looks like an M here to make it look like it has arrived to the peak formation, and then it will come back down, and then it will push up while everyone is focused on a sell. And then later on, you realize, no, all this was level 2, and all I needed was level 3. So that is what I think will happen. So let's wait and see. In terms of higher highs, yes, you can say I've seen the first push, I've seen the second push, I've seen the third push. That is fine. So what do you expect? A sell. And the sell will come. That I can guarantee you. But if you are then now want to be clear because you know you are targeting the high, which is the previous peak formation, then you know that if you focus on your levels, this becomes your first push, all right? And that's where your high is. Your second push did not close above, it closed below. So it means price never traded in that area because they gave you the price and then they went backwards on the same day, and they made sure they closed below level 1. And what do they do the following day? The following day, they make sure they close in the same area as well, right at level 1. So that means this entire thing is a consolidation. So we will expect this current day to close above and then sell back and then give us the last push going upwards. So this happens.
Okay, so I was just gonna say, so I guess then if we're looking at H4 structure, then that will become irrelevant because that will be a contradiction of what you're saying. Will it be not?
If we look at the H4 structure, how do I delete this? Is it Command B?
One and then they delete all thing selected because you've already selected them.
Yeah. So if you look at the 4-hour structure, right? I will show you this. This to me looks like we are at a reset. I've said this with step index. Step index is buying, right? And we did analyze this pair when it was actually sitting here at the um, peak a long time ago. And step index is actually buying, which is a good thing. You can see how it is engulfed here, taken the low, and is closing above that. Now, coming to our H1, D1, you can tell how we're still moving up, and we still need to trade higher so we can cross over 800, 200. Looking at our 4-hour, this is how our 4-hour looks like. I know it's pretty hard to count levels when it's like this, but what I'm looking at is this. We had what looks like a peak formation here. Price traded lower. Then what did price do? Price moved higher, which we would have said is our level 1 at that particular moment. But what did price do? Price reversed the entire move. So that means we start counting from here. So these are the things that you use because the market will trick you, right? So we start counting from here. Now, if we start counting from here, you can tell from this price action, the way it looks like that, yes, you do see these pushes, right? I know these are the pushes that you're referring to, right?
Yes.
These pushes. Now, if price were to push back down, like I said, price might come back down here. If price were to push back down, remember you are finishing the week. Price may start with false week move, and then price will push further up, right? And one thing that you need to take note of, 4-hour pushes are not 1-hour pushes, but sometimes 4-hour pushes may be 4-hour levels, maybe 1-hour levels, especially if the market like pushes aggressively down. But in this case, all this that you're seeing here belongs to the 1 hour. So in terms of 4-hour, we are still creating one level. It doesn't matter how many pushes that you see there, we're still creating one level. Because if you look at 1, 2, 3, and then you come to this price action on your left-hand side right here, and you look at it, what if I told you that this was 1, this was 2, and then this was 3, and then say we've finished the level, and then I realize price comes back there, and then price continues up. You get the sense?
Yeah. Yeah.
So someone might come here and say, oh no, this entire push is one thing, all right? But you are looking at it from your 4-hour, which makes it difficult for you to know what you are looking at. But when you come to volatilities will always pull back into their levels. Sorry, I don't know why it's doing that. Volatilities will always pull back into their levels. So I want you to think of this price action as something that never happened, right? This one right here. Think of it as something that never happened. Price only moved 1, and then price consolidated right there. And then now it's moving 2. If you think of it as something that has happened, yes, you will get the sell there. 100%, you will get the sell there. You will see, most probably the sell will definitely appear there. But while the sell appears, you will still see the last push. That one you will. If only H1 had bought all the way up to there, for example, maybe up to there, right? Then we would have said, okay, this is level 1, this is level 2, and then we expect level 3. That's what we would have done. if H1 would have closed there, but they sorry, if level 1 would have closed there, but they moved all the way up to there, which means anything um above below this line belongs to level 1. Anything below this line belongs to level 1. I don't know whether I can find an example that maybe I can show you. I think it's gonna be difficult. I don't know if I can find an example close by.
Yeah, but you don't have to stress for it. I think now
But you understand it, right? So when we count our levels, we use higher highs, we use ATR pushes, we use consolidations, we use a lot of things, EMAs and so forth. We use a whole lot of things. And yes, you are right. Price will definitely sell there. But because that price action there closed below that level 1, I still want to see one more push, and that push I want to see it match up with that level there, because what we are simply doing, we are filling up the level that we reverse, because we reversed the level, so we are filling up that level before we can then see a reversal. So let's see what happens. All right, let's see how price prints out. If price does sell here and then forms a nice reset and all that, then fair enough. It means you would have got it right. But that's what I think as well, in my own perspective. So let's just see what is going to happen. Okay. Someone
thank you.
Someone is talking about, can we check USD card? What do you think is going to happen on USD card? What do you think will happen on USD card?
Coach. Okay. Let's okay, can we first go to the daily time frame?
Okay, daily time frame.
Okay, so at the beginning of the year, this was my analysis. Yeah, so I was actually predicting a sell for this pair. But every other GU moved, EU moved to a buy, every other team moved, but this one didn't. Yeah. So, but I don't know what happened, but this pair consolidated for a very long time for the sell. So now, last week, I didn't check it. Like, is it last week here or last week rather? It moved. It did the first level. It did its first level. So what I'm predicting for this week is that they're going to do 3 levels for this one on each one, and they'll start selling. That's what I predict.
Okay. I've sent this pair before, and based on the CRT model, I remember that when we were looking at a 3 months time frame. If you want to set your charts, this is what I had seen, and by then when I sent it, this candle was a little bit short, maybe somewhere there. Yeah, maybe somewhere there. That's where it was. And I said USD card is gonna sell because it's a serial term model, and maybe you can expect 50% or the entire move. It's entirely up to you. But this is 3 months candle. And then this is what has been happening. And I still, because we've broken the 50%, like the moment we pass through the 50%, then it means I'm targeting anything lower than that. Because ideally, I would not expect the market to go lower than that if they wanted to continue buying. But the fact that the market has traded lower than that, I would expect to see the market continue selling, but not for a long time, all right? Because remember, if you look at this price action, you are actually on a buy coming from a peak formation from a long time buy. So we are selling on borrowed time, right? Now looking at this, maybe, just maybe, we might be looking into coming down around these areas here before we can get momentum to buy, maybe, or we are already at the neckline right there and we are looking at continued buy. But there's only one way to find out, right? So if you look at this weekly time frame, I was actually looking at this this week, and I said there is no clear direction as to why price decided to pull back here or go up. Like, I can't see anything that's really clear that will show that, oh yeah, price reacted in this place because of APCD. If you're looking at the weekly time frame, all I can see is that price just reacted, or maybe price reacted because of these highs. Of course, even though it's not really accurately there, I'm just thinking out loud, maybe price reacted because of these highs. Now, if you look at the D1 time frame, you obviously do have those bearish candles around that area there. Maybe those are the ones that cause the reversal. So to me, I still want to see us trade lower, coming back to these lows. All right. So in the meantime, because price is pushing up, we are having the likes of Euro USD pushing down. So I would want to see price buy for a while, but buy up to where? Most probably price to come back around that area there to see price push back up. Like I said, this is where price reacted. You can see how price came down, price went back up, and then price came back down in that area right there. So that's where I would expect to see price react. If you go to the 4-hour, the 4-hour only shows you an M formation, but the 4-hour has changed direction. That's the most important thing that I'm seeing. 4-hour has changed direction. It has taken out a couple of highs there. So I want to see us come back maybe here where there was some kind of reaction. I would love to see us come there and then go up. Well, that means maybe you will target this high and finally come to our resting place, which is this one. Then here is when I will analyze again and see how much momentum we have pushing up there, what's going on. Are we gonna continue with the sell, or we're already gearing up for a buy? Every candle has a story to tell, but because those candles are not there now, all I can see at the moment is just a buy. So that is where I would expect USD CAD to come to. Sell low, get to that point, then you take a buy from there and push all the way up. I feel like this is something that will most likely happen. But it would be a shame to see them reverse this entire level. However, I still feel like this is going to happen. So let's see what happens. But that's exactly what I see on USD CAD at the moment. Now, remember, we said higher time frames look like they are selling and all that. It's fair, it's fine. But what you need to think of what you want now. Yes, they might sell 100%, but at the present moment, you are looking for buys. So that is what you want to take while it's waiting for those sales, because the sale will come, but we don't know when. So all we can look for now is taking the buys all the way up to where the buys will take us. and then prepare for a sell if the sell does turn up. All right. Let's do the last one. I need to go and prepare for church. All right. So someone spoke about GBP JPY is making a second leg at level 3M. Can you help with that? GBP JPY is making a second leg at level 3. Can you help with that? All right. So you are saying this is the second leg of that first leg, or you are saying this is the second leg of the first leg? Please confirm which is which.
I'm okay.
Sorry?
So the first one was we are already on second leg of the bigger time frame, but on that second leg, well, that's the thing is, are we making a second leg or is a continuation on a buy?
Okay.
That's the reason why I had to ask.
All right. Okay. That that makes sense. Okay, let's have a look and see what's going on here. So I'm looking at this. It's kind of if you look at this head and shoulder, I will say this is probably my first level push into a consolidation, and this is my second level push, and this is my third level push, and then price comes back down to the 200 EMA, and then price shoots up and price reverses the entire move all the way back. So I feel like based on H1 and what we can see, price has kind of made a reset and they are ready to continue going up. That means price is ready to push 3 more levels up, this being the first level, right? So we want to see us do second level and third level. That is what I see. Okay, and because of the current the price action that price did, you can tell this is a W. You can tell this is a W, right? So if you go to the higher time frame, you will see how meaningful this W is. And because it's sitting at 200 EMA, on other time frames, it's probably sitting at 50 or 800 EMA, whatever it is, right? Now we go to the 4-hour. So if you look at the 4-hour, 4-hour is also sitting at 200 EMA, and that is very significant. So you can tell this pair on a high time frame has been consolidating for a long time, but you can tell how we're still sitting at 200 EMA, like I said, on the 4-hour, and we still have that nice W there. All right, so that shows you this is a reset and we want to see ourselves go higher. So I would not sell this, but I will buy it instead. Now going to D1, same thing. You look at D1 and then you see that everything you can see about this pair, we just had a pullback, which is what we were seeing on H1, that pullback right there. And price is going up. All right. And this is where the sell is coming from that area where it reacted there with that indecision candle, and price is pushing higher and most probably as high as that area there. All right. From the weekly time frame, it's quite obvious because we were buying these past few days, so we would continue buying. So I saw this pair this week. Unfortunately, I saw this pair here and I said, oh, this does look like a buy. Like I did analyze it this way and I said, this looks like a buy. And then, well, I was like, anyways, it is what it is. And this was the result after that. And I said, yeah, I actually lost a good trade there that I could have taken. Simple because I was fixated on that high there. I was asking myself, what really happened right here? But simple, price formed a reset, pushed one level up and then pushed back into the same area. And then it started to give us levels similar to what happened on USD JPY, I think. So I would want to buy here. I wouldn't want to sell. Looking at the higher time frame, I definitely would not want to sell. I would want to buy. And this buy that we see here came off that. So I would want to see us buy all the way up to the highs there. If I put in the monthly doesn't really show anything. Yeah, the monthly doesn't really show anything. But this pair, you can see how it is a buy. Of course, you did have a CRT model that looks finished all the way up to the 50% there, and it's now started pushing up. So I would want to buy bro, not sell on this for the same reasons that we formed a reset right there. So maybe if you decide to buy, you're asking yourself, where would you buy? Looking at it, I would want to see us. We already came to that place. Yeah, we already arrived to that place. So we pushed all the way down to that area right there. So maybe, just maybe, from the 15 minutes perspective, I would want us to push down and form maybe another leg on the 200 EMA before we go up. That's also a good example. Hold on. I thought maybe I was gonna show what we saw on volatilities, but now it looks different because this didn't close above this high. It didn't close above the high. Some people might say, okay, how about this is level 1, right? And I totally understand that. But if you look at it, you are in a peak formation. Your peak formation started here, right? So this entire thing is all level 3. Everything. It started right there on Tuesday, 6th of May. And everything right there is your peak formation. It's just a nice W right there. And so you start counting your levels from here going up. So this entire thing is all level 3. Don't get confused by it. However, if you were on 15 minutes, maybe you would have said 1, 2, and then maybe 3, right? That's how you would have done it if you were on 15 minutes and then expect to see the market come back to the reset. Like I said, that I would want to see the market come to the 200 EMA, not this one, but on the 15 minutes right here. Yeah, the 200 EMA right here before we look to buy. All right. So yes, based on 15 minutes, you definitely say, yeah, that's level 1, that's level 2, that's level 3. I want to see the market come back. But looking at it from the H1, all this entire price action is your level 3. And then this is your first push. And you can tell how, because they are reversing this guy, they made sure that whatever we do here, let's make sure that we match it. So we can then form second leg and third leg going up. That's what I said to you guys before when I said, if price forms level 1 and then goes to level 2 and then comes back into level 1, just know that it will come back to level 2 there and then level 3. So what it means is, this is your first level push. This is your second level push, which has been cancelled by price coming back down. But just know price will definitely close there. It will not go all the way up to there. It will close there. They will always do that. It will close there. So you know your second level is this one and your third level is that one. So what do we do about this price action here? This price action here simple means price never moved. That's what it means. Price never moved. All this that you see here, you might have gotten money out of it trading it, but price didn't move. All right. Thank you very much, guys. I'll let you guys go to sleep. And yeah, let's see what the this week holds for us.